Hi everyone, welcome back. So today I have another guest speaker with me. So his name is Charlie. So essentially, I think you can consider him as a social media influencer as well. I think he has a very huge following on Twitter, on TikTok, and even on YouTube itself. I'll probably be tagging his YouTube channel when I upload this video as well. So maybe Charlie, you want to walk us through your entire investment journey thus far and tell us a little bit about yourself.
Yeah, of course. Yeah. So yeah, my name's Charlie Marr. And I like to describe myself as a contrarian compound value investor. It's kind of a long name there. But yeah, my goal is to pretty much go into the market and I try and buy a dollar for 50 cents. I'm always looking for, I try and look for companies that are like being overlooked, or they're having like a lot of issues. So they're like being distressed. And then I find opportunities and I buy during those times. So I usually find these big discounts through these with companies that are distressed. And that's pretty much what I've been doing, and I've been able to compound a lot. The reason I say a compound part, so that's the value investing side. I'm buying a dollar for 50 cents, looking for discounts, stocks trading below liquidation value or intrinsic value with a large margin of safety. But the compound side comes because I don't actually believe in heavy diversification. I actually almost focus all my money in like 1 to 4 stocks, like at most. And so yeah, so I constantly buy a dollar 50 cents, and I rinse and repeat that method, and it's just helped me compound a lot over the past decade.
Maybe to let the viewer understand now, maybe you want to walk us through your portfolio, because I know that you have been transparent about it as well, and you're posting it on your socials, which also attracted inevitably a lot of attention, right? So
My current position right now?
Yeah, your current position right now.
Yeah, so right now I'm very bullish on Alibaba, and I actually went all in on Alibaba. I own a little bit over $13 million of Alibaba, but 1.1 million of it is actually on margin. So I'm in it like 110%. I'm using like around 10% margin. And yeah, it's a little over 10 million in shares, and then the rest is owned in options. So yeah, so I'm just fully focused on Alibaba right now, and yeah, that's the position I have right now.
Yeah, and I also saw you started dancing to a TikTok, right? Where the backdrop or the green screen is your account position. I had a really good laugh, but of course I know, especially in this kind of distressed times, right? You also inevitably attract a lot of not very sensible and sometimes borderline a little unhappy comments here and there. But I guess that's how things are when people are essentially start holding the bag, quote unquote. So maybe just to discuss a little bit more, right, on why specifically Alibaba and not other Chinese big tech companies.
The answer is actually pretty simple. It's the one I understand the most. I usually, I notice a lot of people in the market are always trying to find like the number one of everything. Like, I need the number one of this, and I want to find the best growth stock. I don't necessarily focus on that. I like to separate the difference between a great company and a great investment. And Alibaba was the one I understood the most. But apart from just that part, that simple part, it's actually the one that was being the most manipulated from my point of view, and like what I'm noticing. So because it's being heavily manipulated, it's very volatile. So for someone like me, I'm able to come into it at really distressed prices. So yeah, I mean, compared to all the other Chinese stocks, I think that that's the one that's just it's the most disconnected from reality. And I like that as a contrarian investor. I mean, I'm sure you've seen the news coming from the US. I mean, it's just nothing but bad news. Like, for a whole week, I remember like almost every day Alibaba had bad news. So you're talking about the TikTok video of me dancing around and I was showing the position. I believe at that point, I only had around 8 million into it. And then it was just bad news over bad news, and a lot of fear over being delisted. And then the whole Didi thing happened. And that's when it dropped a lot. And I was like, you know what, like, this is a really rare opportunity. Because usually I invest in stocks that are a lot smaller. I usually don't focus in such large market cap stocks. I usually don't even follow that, which I'll explain that later why. But yeah, when I saw this opportunity with Alibaba, that's when I went all in. So I sold all my other stocks, all my other positions, and I threw it all into Alibaba. But yeah, I mean, that's pretty much the main reason. I mean, it's just so disconnected from reality right now. I mean, I love that, and it's the one I understand the most, and it's the strongest one. I mean, in my opinion. I mean, I really think it's just being very misunderstood right now.
I think also maybe to add on my point, right? The entire idea of it being manipulated is also because Alibaba is essentially the biggest Chinese tech, so it's kind of a pseudo China punching bag. So whenever there's something that there's a heightened tension between the US and China, oh, the first we shot is we attempt to bring down Alibaba first. So even though we know that Tencent is the biggest, but it's not trading, it's trading over the counter. So in terms of liquidity, in terms of access, there might be some form of there'll be a challenge when people want a much more liquid counter to play with and to essentially quote unquote manipulate. So also, I also wanted to pick your brains on what your general thoughts on the Chinese equities today and the market. So if we were to
You
look
know,
at China by and large.
you know what's funny? One of my very first rules was to not invest in Chinese stocks. I always ignored all of them. Like when I was going through filters or when I was going down my list of stocks, like every time I ran through them, I would actually toss them to the side. I was like, because they've always had a history of trading low. But what really caught my attention is that they went beyond that. Like they were pushed even further than that. So like, for example, essentially I like to buy $1 for 50 cents. And this isn't going to be the right ratios or numbers, but just to give you an idea. And usually Chinese stocks look like that, most of them, like 99% of them, and especially in the US markets. And it just, they dropped like another 25-50% from those levels. So it's like if usually they trade $1 for 50 cents, and I'm avoiding them, when they became $1 for 25 cents, that's when it became super attractive to me, because I was like, essentially that's almost still buying $1 for 50 cents. I'm buying 50 cents for 25 cents. So like, even if they always remain at a low multiple, I mean, I still believe my downside is very limited and I can still make some profits on that. But yeah, I mean, and on top of that, I mean, I love, as my contrarian side is, I love how everything in China is growing. Like everything is growing. I mean, and from the way things are looking, I mean, it's most likely going to surpass the US and become the strongest like economy, by 2028, 2030. So, and it's so odd how China and everything is just growing like crazy, yet their stocks have been doing nothing but going down. So that's like that common factor that I love that distance, So my contrarian side, I find that funny, So I see the opportunity in that. And like I said, I think my downside is limited, so I'm all for it.
I think also the greater the distance between the disconnect between the actual fundamentals and the stock price itself, the greater the amount of opportunity and appreciation that us as investors would probably be able to enjoy in the coming decade or so, or however long you're holding in terms of the opportunity. Yeah. So maybe also to tap onto the valuation part, right? I really wanted to play a very simple game. So I wanted to talk about let's play a simple game of devil's advocate. So I will be the bear of Alibaba today, and you will try to defend some of the common comments or common rhetoric and commentary surrounding all these different Chinese tech stocks. So maybe I'll just start off. I think you also touched that point pretty simply put just now regarding this low valuation. So essentially, the Chinese government is more of like a known unknown. So people can't really understand what exactly are they trying to do. People can't really understand whether they are really business friendly or do they want to kill all these different golden gooses. So a very big uncertainty will inevitably also cause all these valuations to stay low. And in any instance, what if moving forward, maybe even in the next 5 years, 10 years, what if the valuation multiples continue staying low? Even though we know that regardless of what kind of multiple or what kind of valuation technique we use, we know that every single company is cheap. They're trading at a very cheap valuation. But valuations just don't recover just because of this Chinese government uncertainty. So do you have any comments on that? Or what do you think about this entire valuation discount on Chinese equities?
Yeah, I mean, for the first part, I think that they're really misunderstanding China. I think a lot of people just kind of read headlines and that's it, or they reach like the front cover, the first page, but they don't actually go through it all and understand how China works. And we've heard Charlie Munger say it, and he's quoted other people how like China doesn't care whether the cat is black or white. All it cares about is if it's catching mice. And so that's the first part. I don't think people really understand China, and I believe that China is kind of the opposite of the US. They like to work from the bottom up, versus the US. They work from the top to the bottom. So I guess that's the whole first part, that they're just not understanding that they're not trying to disown their own companies. I mean, Alibaba is like their baby. And they definitely want these companies to succeed. They want the best for them. But I think they're trying to work on the foundation, and working on the middle and like the lower class and stuff is going to help build everything up. And in the long run, it's going to help these companies. They just simply want them to pay their fair share. So that's kind of the first part. As far as the second part, let's just say that they do remain in a very low like multiples in the future. That's actually something that doesn't necessarily bother me, just because again, the downside is very minimal in my opinion. So like worst case scenario, I mean, we can agree that, I don't know, how people are giving it targets of anywhere from 200 to 300, but let's just say worst case, it ends up being 150 or 120. Like the downside, I mean, I will either break even, which will be completely fine with me. My goal is just not to lose money. That's one thing that you need to understand about me. Like, I don't really focus on how much money I can make. Of course, that's a factor and it helps, but that's not my main goal. My main goal is like not to lose money and like to try and protect my downside, which sounds kind of weird because I'm going all in on a stock. But so even if they remained at low multiples, Alibaba is in a position that will either break even, or I will have a very low, like, I'll take a small loss on it. So that's that second part. And I guess the third thing would be kind of like, I feel really comfortable with Alibaba because how much it's been beat up. So like, even if like, let's just say there's a huge market crash, because Alibaba has been beat up so much, a lot of the weak hands have already left. So that means like, if the market starts to crash, like, yes, everything will go red, but Alibaba is one of those stocks that might not be as red because all the weak hands and everyone who panics, majority of them are already out. Of course it'll go down, but let's just say on average, the market goes down like 30% or 50%. Alibaba might be down 10 or 15 or 20%, but it will still perform better than the rest of the market, in my opinion, because of how beaten up it's been. So for those three reasons, it's why I feel very comfortable holding Alibaba. So that's one of my purposes, I guess. Just, I can go to sleep holding Alibaba, whether the multiples stay low, whether the market crashes, and just the contrarian side, obviously the opportunity to make money on it.
I think I actually
Hopefully.
do resonate quite deeply on the third point. Essentially, a lot of people are afraid about the manipulation of the Chinese government, how they're going to affect the entire markets and all the different companies, right? I'm actually more afraid of the US markets crashing today or probably tomorrow or next week. I know we understand that we talked about lofty valuations and a lot of all this big tech has crazy sky high valuations. And I'm not saying or not insinuating that they will crash. I'm just saying that in today's context, I think the scarier part would be there'll be a market-wide crash and it will inevitably spill over to the Chinese equities market. But that said, I'm also fairly confident that if you were to look at Alibaba's current valuation at 350 to 80 billion, thereabout, if they're going to go for a 50% crash again, it's worth $150 billion. Just so you guys know, especially for those of you who don't use some of the services and don't exactly know how the business functions, 150 billion, if you were to go to China and tell people that, hey, Alibaba is worth $150 billion today, I think a lot of the people there would start laughing and say that. Whether they will buy the company, that's another issue. But I'm just saying that at this current valuation, if you have to go down another 50%, I think that will really cause quite a lot of havoc in the markets as well. So I also do think that we are currently hovering at a very interesting valuation. I don't know whether this will come around again, but also I also like to follow Buffett's first rule, which is don't lose money, and the second rule is don't forget rule number one. I think
Yeah,
that's also
exactly.
that's also something or investment philosophy that I do subscribe. So maybe then we talked about understanding the companies and understanding the stocks that we invest in, right? Then maybe I'll push you a little and understand. I personally also feel that China has a lot to improve on. So one thing is the idea of transparency. So China can be a lot more transparent in terms of their dealings, in terms of how they come about certain regulations and to explain some of their positions. But like you said, they couldn't really care less about what other people think about them, because ultimately they only have to answer their people and they have to make their country great. And the rest of all these are just noises. So in this case, can anyone really understand what exactly is going on unless Chairman is your parent, or maybe you have some spy in the CCP? How do you exactly understand or comprehend this entire complicated structure that they've created thus far?
You know, that is kind of a hard question because yeah, I mean, nobody has a crystal ball, nobody is on the inside. But I mean, from my understanding, I believe what China's doing is it's trying to copy what Singapore did. And correct me if I'm wrong, or people in the comments could kind of respond, and that worked out very well. And so, like I said, I don't know too much about everything in China and like about trusting and stuff, but I just believe that in the long run, because of everything that they're doing, I mean, just to give people an idea, and these aren't just words by me, I mean, these are words by someone like Ray Dalio, that like they say that China is like a very big capitalist country. It's almost like the second biggest one, as much as it doesn't seem like it. But a good example of that is like they're making like a new stock exchange for like all the middle companies. I don't know what it's called yet, I don't know any of that stuff, but like instead of all these mid companies taking on loans, they're actually going to get investments from banks. So it's like it's helping them. So all these little things like that, I mean, just kind of, I think what they're doing will benefit them in the long run, and people will look back and appreciate what China did. But I just, unfortunately, I mean, I also can't really prove that. I mean, I'm kind of going off what I just kind of see, and I'm kind of going with my gut here. But yeah, I mean, that is a kind of complicated issue. I mean, I just don't think China will try and like destroy their own companies or anything like that. You know, yeah, it's kind of a hard question to answer, to be honest.
Yeah, I personally have been grappling with this question as well, because I've gotten a lot of comments and DMs saying that, oh, why are you so confident about what they're doing? How do you exactly know what they're doing and stuff like that? I think at the end of the day, most of us as investors, we are just playing this jigsaw puzzle, right? We're getting bits and pieces here and there, we are forming our own picture and our own understanding of the entire worldview. And I would like to echo what you just said. I think I'm from Singapore, so personally, I'm born here. I grew up here. I went through the entire system. I understood, and Chinese is my mother tongue in this case, because we have a bilingual policy over here. So I really took interest in the entire Chinese culture. I understood it since young, and my parents actually converse with me in Chinese at home. So English is kind of my second language, but I managed to kind of hone both language skills. But essentially, it's true. I think China, at least in the earlier days, in the 2010s, they are very much alike like Singapore. They really have a very core focus in making sure that they are very task-oriented. They have a very important goal that they seek out to achieve. But I think China, in today's context, they have evolved into something, into their own flavor. They already kind of surpassed what Singapore wanted to achieve because of the sheer size, because of their capability to scale. That's, I think, Singapore is a very easy island to monitor and to govern, because we only have 5 million people. They have 1.4 billion people over there. I think people still don't understand the scale and the amount of exponential increase and growth that they can achieve. But that said, of course, we understand that there has been a lot of developments, and what we can do is really try to understand it from their point of view. What are they exactly trying to do? I think that's let's not try to demean and put them down and say that, oh, because we are not capable of doing it, other countries are also unable to do it. I think that's a very dangerous assumption to jump into as well. So maybe if you were to talk about Alibaba as an investment, so how or what needs to happen in order for you to sell Alibaba specifically, since you have such a big position and you are leveraged up essentially?
Yeah, you know, there's about 3 or 4 things that could happen that I would sell Alibaba. But I think the first thing that I should say is I'm actually not even really long-term Alibaba like bull. I don't even know if I'll hold Alibaba for over a year. Usually on average, I hold my stocks like 6 months on average before I sell them. But the reason I feel so comfortable with Alibaba is because it is a stock that if push comes to shove and like worst case scenario, I could hold it for 3 or 4 years. Like even if it take 4 years to double in price or 6 years, I mean, it'll make me a lot of money. I'll be fine, in other words. But so the first thing that would be just it, if it starts kind of running up and this is just more, this doesn't really have anything to do with catalyst. I mean, this has to do with my position and where my money's placed. But if it already starts running up, I don't know, let's just say it's like at 180 or something, or 190, and I'm already up a decent amount. But if another opportunity like arose that was just in a better like position, like had a higher return on investment, but more importantly, it had like a lower risk or like a better margin of safety, that would be something that might have me sell maybe a couple shares to transfer to like adjust my portfolio and move some money over. So that would be one thing. Another thing would be like, of course, a major catalyst. Like if something crazy happened that it like completely devaluated Alibaba and like just changed it drastically. But I really don't think that's happening. I think a lot of people are having that crazy kind of going back to what you were talking about Singapore and China. I mean, they really have this very bad American mentality over China. And I feel like they just don't fully understand it because all they read and see is very biased opinions on headlines and news and like the news and all that stuff. But so I guess those are two things. One, if a better opportunity arose, but like if I was up, if I'm still red, or like if it's still kind of in the same area, I mean, I don't mind holding it still. I mean, I could sell covered calls or anything like that and make some extra money on that. Or the second one would be if an opportunity arose. Oh, the same one. If there was a major catalyst change. And then the third one would just be like, it just already doubled my money. I mean, if we see it already at 250, 300 or something crazy, then I would sell. Funny enough, I mean, as bullish I am on Alibaba now, it's not a stock I actually, for my style, because I'm not a financial advisor, but for my style, it's not a stock I believe people should hold for a really long time if they're aiming for high returns and trying to like make millions in the stock market. Because let's just say Alibaba doubles from here. Like it's going to be a lot harder for it to double from 300 to 600 and from 600 to 1,200, you know? So it starts becoming very minimal. So my money would be better off in other places. So time, I guess, would also be like important, depending how long I've had it already. If I see I'm kind of wasting time and stuff, I mean, I don't mind making adjustments. So those are all the little reasons. So it's not so much even about numbers in Alibaba or anything like that. It's more so just everything apart from that.
Okay, do you want to expound a little bit about your investment philosophy, about this entire idea of buying cheap, and then how you pick your all this, how do you pick out value stocks and how do you trade value in this case?
Yeah, so I have this theory that like I kind of call it just the 3-stage theory. And technically there's 4 stages, but the main ones are 3 stages. And this is meant for people who want to do this for a living, who like, it's not meant for doctors or lawyers who just want to have a little bit of money on the stock market, or meant for people who are just trying to make a little bit of extra money, you know. It's meant for those people who are trying to achieve like millions of dollars, you know, hundreds of millions or billions of dollars. And I strongly believe there's a very clear path to reaching that. And it has to do with probabilities and with liquidity and with where your money is better off. Which includes the volatility part. And the 3-stage theories is that you start off when you have a very small amount of money. You want to look for really small market cap stocks, and they can be very crappy stocks, but you focus on their liquidation value, so it kind of changes the risk a little bit. So you kind of evolve from buying really crappy, shitty companies that not a lot of people are familiar with or that are being very overlooked. So you evolve from buying companies like that to eventually, when you have a medium amount of money, to buying okay companies that are like at fair prices. So you go from buying $1 for 50 cents to practically buying like $1 for $1 because you believe that dollar will be worth $2 or $3. So you kind of start to speculate a little bit. You're no longer getting a deal, but you're getting a fair deal. And then the third stage would be you start buying amazing, great companies at really crappy prices. So it's because, you know, the higher they are, I mean, they start trading at higher multiples, you know, and they become a lot stronger. So once you get to that third stage, I mean, you're buying these really big companies like Waste Management. You could move into money into Apple, Alibaba, Amazon, and in that case, you're almost buying like $1 for $2, $1 for $4 sometimes. But in that dollar, I mean, you're buying $1 for $5 because you believe it's going to be worth $10. So now you're being super speculative. And I strongly believe that is one of the best ways to achieve a high return on your investment, like in the stock market. So I follow that rule. And that's practically what I'm doing. I mean, and I don't diversify. So I'm right now, I'm still in stage one. I believe even if you have under $50 million, you can actually still be in stage one and focused on stocks that are trading below liquidation value, really small, unheard of companies that are just being distressed. A while ago, for example, there was a company called Ollie's Bargain Outlet, a great company. I mean, the numbers, the fundamentals were phenomenal, no debt. But out of nowhere, the CEO died. Like he just had a heart attack and died, which is very sad. But there was an opportunity there because the stock just started collapsing. And then because the CEO died, management was kind of a mess. So it dropped even more after a quarter or two because obviously the reports were all messy. So again, that was a really great opportunity to put money in. And then obviously that was something that was fixable. So yeah, so that's kind of my strategy and kind of like my way in the stock market. And right now I mainly focus on stocks trading below liquidation value, but Alibaba was just a huge exception because I believe Alibaba is one of those stage 3 stocks. It's usually a stock that like that if you have hundreds of millions of dollars, then you put money into it. Because if you have, this is the thing, if you're investing $5,000 or $10,000 into a stock like Alibaba, and let's just say it triples, but maybe it takes 10 years. I mean, you turn $10,000 into $30,000. That's not as, you could have made more money per year with a regular job. So that's why I don't like that style. You'll make money, so there's nothing wrong with it. So, but that's why I don't recommend it if you're trying to achieve high returns. But in this case, Alibaba just fell from being like a stage 3 stock to acting like a stage 2 stock. So it might be a little confusing, but it became that undervalued in my opinion. So I was able to make an exception, and I'm like, you know what? There's a huge opportunity here. I don't think we'll see an opportunity like this. It just got hammered after hammered. I mean, Chinese stocks were already trading cheap, and then Alibaba had their issues, and oh my god, it was crazy. But yeah, I don't know if that kind of made sense to you, but that's kind of the approach or strategy that I follow investing in the stock market.
I think maybe I also wanted to pick up a few pointers here and there because some of the strategy or some of the philosophy that you follow isn't really very mainstream. So mainstream people tell you you need to diversify, you need to hold for the long term, you need to have a long term mindset. And then when through the discussion that transpired, we were discussing about you don't really hold stocks for a very long time frame, and you go 1 to 4 companies instead. So in this case, can I understand how do you derive this entire strategy on your own, or where do you get your inspiration from when trying to invest in the market?
It actually all started to kick in because the idea of it, or like the concept behind it was actually kind of built because of the way I was viewing crypto, which was kind of that's actually where it originated from. And then I started digging more into it, and I started hearing keywords that super like billionaire value investors were saying that matched my theory, like Seth Klarman. And I posted a YouTube video over it. But essentially, I was, how do I explain this? This is kind of how it started. I was looking at crypto, and obviously when crypto was a very small market cap stock, and I don't like crypto, by the way, but like I'm gonna get some hate comments, but you'll understand it. When it was worth $10 million, if you're a billionaire, when Bitcoin was at a $10 million market cap, if you're a multi-billionaire, you can't invest in company in Bitcoin. You could only, what are you going to put? It's worth 10 million. You can't even buy a million. Good luck buying that much when it was that small. So like for someone with a lot of money, a very small market cap makes no sense. You either can't buy it or it won't move the needle. I mean, what is he going to add $10,000 into it? But for people who have a very small amount of money, they can add 5,000, 1,000, 10,000. And as Bitcoin grew and exploded in market cap, then small money was able to make a lot of money. You were able to make hundreds of thousands of percent gains, or like become a millionaire essentially, but now that it's such a huge market cap, I kind of find it a little funny that there's a lot of smaller money trying to buy Bitcoin at its current stage when it's very hard for it to make you a lot of money, which goes back to what I was saying with Alibaba. Like there's people, let's just say Bitcoin was at 50,000. I don't know where it's at now. And you put $10,000 into it, and maybe it does reach $150,000. You grew 3 times your money, but you only went from 10,000 to 30,000 in I don't know how many years, But if you're a billionaire, like the other example that I was giving you, he could have put $1 billion into it and he turned $1 billion into $3 billion. So the bigger the market cap is, the better it is for bigger money, because you're able to, the return on the investment starts to diminish as the bigger the market cap is. But like I said, yeah, you can put $10 billion into Bitcoin now, and if it doubles, I mean, you make $10 billion. But someone adding 10,000, turning it to 20,000 is not, that doesn't make sense to me. So that's where it started. I was thinking of that, and I was like, this actually starts to make a lot of sense in the stock market. It works the same way, So a lot of people were making fun of me because I have a high return on my investments. They were like, how are you beating the professionals? They're like, Warren Buffett can't even beat 25% or 30%. How are you achieving 100 or 90%? So that was kind of that attitude people had towards me. And I had to explain it to them. I was like, well, they're working with hundreds of billions of dollars. So they're actually limited to the amount of stocks they can buy. Like they could only buy really large market cap stocks and they move a lot slower. But someone like me, when I was first starting off, I could invest my money in really small market cap stocks that go from 10 million to 50 million. That goes up. Let's just say I found a stock that's worth $10 million and it goes to 50 million. Like I could turn $10,000 into $50,000 essentially, but it's worth 10 million, So it goes back to the Bitcoin thing. Like big money can't do what small money can't do. So I started mapping out, like, I kind of drew out what I was thinking in like a chart. And that's kind of where it all started to build off. Like, to make the most money when you have a small amount of money, you have to work from like stage 1 to stage 3. But yeah, that's kind of how it occurred. And as far as the diversification, I mean, I don't always go all in on one stock. Usually I hold 3 or 2 of them. Max, I'll do 4. But so it's not as scary. But the reason I feel very comfortable with is because a lot of these really small market cap stocks are trading below liquidation value, which literally means if you were to grab all their assets and all of the and discount it all, like I can grab all their assets, discount everything. You're basically scrapping the company, scrapping it, and you pay off all their debt and liabilities. There's a lot of money left over for shareholders, which is why I feel confident putting a large percentage of my portfolio in some of these stocks, because I know the value of it. So it doesn't scare me when they go down a lot, because it's like I can buy $1 for 50 cents. I can buy a stock that its liquidation value is $10 and I bought it at $5 and maybe it goes to $3. Most people would panic and get crazy because I don't understand too much what they're involved in. But because I know the value, it doesn't worry me. And eventually the market agrees and kind of brings it up. But long story short, that was a long explanation, but that's kind of where my world is at.
I think, as in, I generally do agree with what you say. I think when it goes below liquidation value, I think you're even more hopeful that it goes bankrupt. So it means you're paid more and you're not taking on the risk anyway. But of course, at the end of the day, it depends on how the management attempts to bring the company back to life. So of course, none of this is investment advice, by the way. So I also do share a few different thoughts and philosophy in terms of how we should diversify and how you should invest. But at the end of the day, all of you guys should just do what you feel comfortable with and how you best sleep at night, because everybody's made different, and you should find your own investment style. So in this case, maybe just to quickly end off this discussion, how are you intending to invest in 2022? In assuming that Alibaba do recovers and you liquidate a good portion of your investment away because you made let's hope that you make at least a 35% return on investment on your Alibaba trade. So what do you intend to do in 2022?
So I do believe in being fully invested, but I think there's a fine line of being fully invested but safe, as in putting your money, especially at times where the market is, how we were talking about earlier, like there could be a huge market crash or like a recession. So like at this moment, I would be scared to be messing with big speculative stocks. So I definitely would be with Alibaba, which I feel comfortable with for the reasons I said before. So I would still be fully invested in the stock market. I would just find stocks that I really understand that are actually trading super cheap and that like have a minimal downside. Like I would have to feel like I could go to sleep and I won't be worrying about it one bit. I don't have to be looking at my portfolio every day. The market could close for 5 years and it wouldn't worry me. I would be fully invested, but I would be in stocks that are not recession proof, but like that would be most likely to be least affected if the market started to crash, because we are kind of in a scary area. There's a lot going on, but I'm also not going to like hoard cash and be like, no, I'm not going to touch the market because the market's going to crash, and then 3 years later and it never crash. So like that's also a foolish thing you can do. So like I don't believe in trying to time the market or anything like that. I mean, you can make adjustments within it, but to try and time the market, I think, is a mistake. I mean, you can call the market crash 10 times and it'll happen eventually. But so yeah, that's kind of where I stand for 22. I think I'll still be fully invested. I'll just be a little precautious with what kind of stocks, and I'll stay away from I might stay away from very heavy tech stocks because usually they have high multiples. I'd rather invest in stocks that are more machines and factory, coal, like old school type of companies that have real assets, not so much intangible and goodwill and all that kind of stuff. So yeah, that's kind of where I'll be, but who knows? I mean, I think we'll be fine maybe until at least to at least the middle of next year.
Okay, Ken, thanks. I think many of you would probably have interesting insights in this entire discussion. I learned a thing or two from Charlie as well. So for those of you who want to subscribe to him, he has a YouTube channel, he has TikTok, he's active on Twitter as well. I'll leave all the links in the description box down below. So with that, I hope you guys enjoyed the discussion, and I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye.
Yeah, I'll see you in the moon. Bye.
Yeah.